we are strong enough to meet like our financial requirements, and investors can feel much safer to invest in the economy, even though we are still at a critical place where we are, still some insecurity and all of the other things. However, from S&P, Standard & Poor's ratings, investors can be more confident when it comes to bringing money into the economy, because it's positive that the money is not going to go down the drain.
So this is what we define growth. The economy is actually stepping up, and we are coming up to a level where we're not just seen as, surviving nation. We're now at a developing nation. And from statistics, numbers and data, we can see that Nigeria is growing fast and vast.
One of the implications, like we said, for investors is definitely like, this is a green light. First of all, the revised manual and the S&P's improved ratings. Like, you need to still be cautious about doing your due diligence for anywhere you be investing in. However, Nigeria is becoming no longer a fragile place to invest, but actually somewhere you be confident to keep your money and put your money for it to grow.
Well, GTCO Holdings just released their, financial, like their earnings for the year. And we see something very significant for GTCO. We see that Habari Pay, which is their fintech platform, it's a digital payment platform for merchants. We've seen that this was like their highest performing subsidiary within GTCO. So Habari Pay did 9.7 billion naira. Right.
The numbers matter.
The numbers,
at the end of the day. So for fintech startups, we see that era of low competition customer acquisition is officially dead. The competition is big. Startups are now forced to compete directly with well-capitalized, bank-backed platforms that possess built-in regulatory compliance, networks, and millions of active accounts. Honestly, if you want to come in as a startup today, chances for failure are
really low.
They're high. $10 billion in a single month FX supply, a 9.7 billion naira fintech engine within a traditional bank, and a $5 billion blockbuster IPO. Now, this shows that liquidity isn't just moving into the market. It is now at the front seat of this economy. Welcome to this episode of Across Markets by P360. My name is Joy Abia, and I am your host on this space. And with me, I have
Vera Ifechuku, your co-host on this show.
All right. Hi, Vera.
Hi.
Okay. So, what was last week's episode for you like?
It was a lot, and it was really relatable.
Okay. That's amazing. All right. Okay. Last week, CBN launched its 4th edition of the Foreign Exchange Manual.
Yeah.
And I attended it virtually, and I can say for a fact that, there's a lot of, should I say, hope that is coming from the reforms that CBN is making for Nigeria's economy.
Yeah, it happened on the 15th of May.
Yeah.
And with the FX manual in play, I can literally say and see that we're going into the lighter space, and the economy is definitely growing massively in terms of, returns of investment and everything that has to do with the economy. So I believe and I feel like, yes, the manual would help us go a long way and come a long way.
Yeah, I mean, there was someone who spoke on behalf of, the customs service, I think, Nigerian Customs Service, right? And then the CEOs of banks within Nigeria. And, those were very significant representations for me, right? Because, I mean, FX is very important when it comes to, the customs service that is the, for importation and exportation. And so Governor Yemi Cardoso, gave his speech at the launch, and he did give us some promising thoughts that the FX manual is going to do, a lot for, the coming, it's part of the reforms that the CBN has been putting in place, for like Nigeria's economy to move forward, which we have been seeing has actually been positive.
Yes.
So what does this FX manual mean? The revised edition, especially for those for businesses and also investors as well, who handle cross-border trade. It's really just going to do a lot for helping with at least medium-term stability, right?
Yes.
Yeah, like so you can be able, I mean, for a while, like we've seen the FX rate hasn't been, like we said last week, it hasn't really, we've seen a lot of stability, I would say. I think over from about like 1.3, we've still been in that range for quite some time, and it hasn't been very, very heavy. Like the fluctuations hasn't been very heavy since like maybe like the beginning of like this administration, maybe was like 2 years ago or thereabout. But now it's relatively stable, and the FX manual is even like, you know, just a proper, like a new revised guide on how to, you know, use the foreign exchange going forward for banks, businesses, and you know, custom officials as well. So yeah, like what do you think?
I also, with a, you know, due to the regular unpredictability in terms of import and exports, all of that, with a modernized rule book in play, or with a modernized rule book that is going to like be like a guide to everything that is going to be taking place in terms of FX here. It's going to be like an institutional commitment to, you know, bring up international standards in terms of our economy and how, you know, how we do daily transactions and all of that. And also it's going to have a really good impact in our FX, you know, stability with other foreign countries and all of that.
That's right. I mean, Cardoso also mentioned that they did take a lot of cues from how like the global environment is.
Yes.
So not just so that Nigeria cannot just be won't just be operating on this, like, you know, it's not just about us anymore. We need to be able to have strength for the global economy and, you know, be able to stand strong there. So I mean, aside that, you know, I mean, another interesting thing that happened was the S&P improving our our economy ratings, our credit ratings rather, from a B- to a B. And honestly, when I saw the news, and I was very, very impressed. I was like, it's just been a series of good news, I'd say, like happening back to back for, you know, the money, economy, everything. Like it's really looking good. Okay, so I mean, the B signifies something. It signifies that we are not like we are strong enough to meet like our financial requirements, you know, and investors can feel much safer to invest in the economy, even though we are still at a critical place where we are, you know, still there's a lot of should I say still some insecurity and all of the other things. However, you know, from S&P, Standard and Poor's ratings, we can actually, it's pointing to the fact that investors need to be more can be more confident when it comes to bringing money into the economy, because it's positive that the money is not going to go down the drain, and it's safe to some extent for sure.
Yeah, and also, you know, the S&P global rating thing did not just upgrade; it actually upgraded in hard cash flow. Because now, when you look at the average of 8.6 billion dollars monthly turnover last year. As at last year, it was $8.6 billion turnover. But just April alone this year, it's at $10 billion. So this is what we define growth. The economy is actually stepping up, and we are coming up to a level where we're not just seen as, you know, the surviving nation. We're now at a developing nation, and from statistics, numbers, and data, we can see that Nigeria is growing fast and vast.
Right, you're absolutely right. So I mean, one of the implications, like we said, for investors is definitely like, this is a green light. First of all, the revised manual and the S&P's improved ratings. Like, I mean, you need to still be cautious about doing your due diligence for anywhere you be investing in. However, Nigeria is becoming no longer a fragile place to invest, but actually somewhere you be confident to keep your money and put your money for it to grow. And, you know, still on that, we are like, it's just a bunch of news, good news and good news and good news. I mean, like, we also last week on PENCOM. Do you want to read the headlines for us?
Okay.
Yeah, PENCOM and the Dangote.
The National Pension Commission, PENCOM, is preparing a clear path for pension fund administrators, that's the PFAs, to aggressively participate in the upcoming initial public offering (IPOs) of the Dangote Petroleum Refinery and Petrochemicals Complex.
All right. So this I think I read this I actually came across the news, or rather this update from Oluwatosin Olashendi, the founder of Lada, and she was basically deciphering why this is important and why we need to pay attention to the fact that PENCOM is actually making all of the standards that it had for over how many years is now being revised to contain one company, which is the Dangote Refinery, Dangote Petroleum Refineries. Now, what does this tell us, right? Dangote plays a very important role, in the structural shifts that we're seeing in Nigeria,
Yes.
right, and the African economy as a whole, with oil, petroleum, fuel, and which is a very delicate sector and one of the most thriving sectors in our economy, right? So Dangote is playing a huge role, and the reason, following the IPO, PENCOM is revising those standards to accommodate for pension fund managers to actually, tap into this, because it would definitely make sense to put more individuals, more investors into, to make them a part of this, of this like structural change, this shift that is happening within the economy. I personally think that it's really beautiful. I mean, they're targeting a $5 billion raise in IPO this coming, I think very soon. I think it's in June or so. I'm not sure of that time, but it's this year, very, very certain. That for a company like the PENCOM to actually do that, it signifies something. All eyes should actually, or it does signify that, money should be there.
Yes.
That's really what it's actually saying. Like, money should be there, and there's no reason why people's pensions or people who are planning, their retirement fund, should not have a piece of this bread or this company that is about to maybe change things in the next few years thereabouts.
And this is also like the ultimate test of domestic capital market depth, because looking back at 2019, MTN, they were able to meet up with $876 million, right? And
which was the highest at the time.
But now we're Dangote, they are currently targeting $5 billion. Do you understand? So look at that. We can say that this is billion, right? So we can say that this is actually a very, very good level of trust. Somewhat we might think of this to be gambling, right? But
I mean, normally pension fund managers actually always do. I want to be careful with my words. I want to say they take the safer route, but I wouldn't exactly say that because I wouldn't exactly say that they take the safer route, but most pension is one of like the most delicate investments, because people are banking on this for their retirement, so first of all, it's the priority of that investment doesn't really go into very risky markets or risky investments. Mostly government-backed securities, I'd say, and others. Of course there'll be others there. Fund managers always know the best ways to put your money. However, now this is like us seeing for what they're doing for Dangote. So what was the question you asked?
I asked if this is actually gambling. Like, is it risky? Are we safe?
I mean, whenever it comes to money and all of those things, you're either gambling. If you want to make money, it's actually called gambling at the end of the day.
Okay, so let's put it this way: the lower the risk, the higher the outcome.
No, the lower the outcome actually. So
the
higher the risk, the higher the outcome.
You're saying that I should dust my shoulders and take this big risk.
I mean, if you're a pension fund manager, because But for fund managers, the truth is they would always know what to do. And whoever is an expert in what they're doing, they do. However, this revision of the, these requirements, it's just a point. They're just pointing you to one thing, that it is, you might go there. Like it's okay for you to go to Dangote refineries, take a piece of that cake, own a share but of course you have to move with discretion, know how to manage it with, the whatever may be coming, global oil shocks may come in the future and all of those things. But I'm sure the ultimate reason behind it is not just for the returns, but for the fact that what Dangote is going to do for the economy, the Nigerian economy, is going to be big, especially in solving our oil and petroleum fuel issues. So, yeah.
Thank you very much. Okay, so I want to relate a question to you. All right, so with PENCOM, and Dangote Refinery thing that's going on right now, could investing too much money in Dangote Refinery become risky? We all know how the oil and market shift and the changes here and there that goes on. We all know, and we cannot predict it, right? But do you think it will become risky investing in Dangote Refinery? That's a question for you. Leave it in the comment section and let's know what we all have to say.
Okay, amazing. And now on our feature segment, we'll be featuring CEO Segun Agbaje and GTCO's Habari Pay. I mean, he recently just said, I think that news just popped up on the first thing I opened on like LinkedIn, I think maybe like last week, just one. I'm like, Segun basically said that they're no longer threatened by any of the things happening in the fintech space anymore. Why? Well, GTCO Holdings just released their, financial, like their earnings for the year. And we see something very significant for GTCO. We see that Habari Pay, which is their fintech platform, it's a digital payment platform for merchants. We've seen that this was like their highest performing subsidiary within GTCO. So Habari Pay did 9.7 billion naira. Right. So he's sitting pretty. He says no. He's not trying to be.
Yeah, imagine you're the one in that situation. You know how, the fintech world, the competitions, and you know how much pressure is in there and all of that. So you don't know for how long, or I might not know for how long they've been trying and pushing to come at this level that they are right now. So for them to get this, it's a big win for them, I would say, because it's not actually easy, because he doesn't even care and is not so concerned about the fintech competition and all of that anymore. So I feel like that's a very great goal for us and for him actually, for GTCO actually.
Absolutely. So basically, I'll just be reading out the implications. So for the implications of this, of the Habari Pay news and for GTCO is for legacy banks, which is holdcos, right? This is just validating the playbook that, banking transforms into a low yield regulatory foundation, while non-banking subsidiaries capture high margin digital transactions. Yeah. So at the end of the day, banks, because of these regulations and the environment, they need to play much safer. And because of the safety regulatory transformation, like I just mentioned, you need to play it safer, and then you end up giving just operating a low yield environment. However, with fintech, which is non-banking subsidiary, this is digital transactions, this is money. And when you're in, like I've heard it several times, if you really want to make money, create something that people are, using for payments. Payments platforms are actually always they actually do capture like the highest earnings ever. For fintech startups, that era of low competition customer acquisition is officially dead. Startups are now forced to compete directly with well-capitalized bank-backed platforms that possess built-in regulatory compliance networks and millions of active accounts. Okay.
Wow.
So the implications about this story, with Habari Pay and GTCO is basically, it validates the holdco diversification playbook, which means that at the end of the day, banking transforms into a low-yield regulatory foundation, while non-banking subsidiaries capture high-margin digital transactions. I personally, well, what I say doesn't matter. The numbers matter
The numbers,
at the end of the day. So for fintech startups, we see that era of low competition customer acquisition is officially dead.
Yeah.
The competition is big. Startups are now forced to compete directly with well-capitalized, bank-backed platforms that possess built-in regulatory compliance, networks, and millions of active accounts. Honestly, if you want to come in as a startup today, chances for failure are
They're high.
yes. As a startup now, you're competing the competition is very strong. So if you're just going to come and think that you will dominate in a few years, it's hardly possible, because look at Habari Pay now. They already have a solid foundation of customers, a solid foundation of investors, and from GTCO, starting from GTCO, and then Habari Pay. This is why they would have that strong. This is why they can actually succeed at that level.
Yeah.
So, and I think there's no traditional bank now that does not consider, of course, this play book way. Like, they do not have maybe a fintech platform on the side. They definitely do.
Yeah.
So and so for investors and shareholders, this confirms the structural earnings quality of GTCO, supporting a sustainable dividend distribution model and justifying the group's aggressive valuation premiums. GTCO looks good. Your money can go there. That's really what all these numbers are saying. So now, so these are 3 signals we think you should be watching this week.
Okay.
The first is the CBN's 305th Monetary Policy Committee meeting, which held on May 19th and 20th of this month. Now, the current monetary policy rate stands at 26.5%. And now, by the time we're done, by the time we come in the next episode, we'll probably have the update of what was released at the meeting. Okay, so this is definitely something to watch out for, because it's going to affect the interest rates given by banks and most financial institutions. It is important that you watch this for your money, and then you begin to see whatever changes that your banks would make in your transactions, and maybe borrowing money from financial institutions and thereabouts. Okay,
this is what to watch. The key representation of Managing Director of First Bank, Olusegun Agbaje, and the CEO of Dangote Refinery, David Bird. Investors should closely monitor how Moody's responds to S&P's recent credit upgrade, and whether they will watch the rating upward, which would spark a fresh wave of Eurobond buying. Very, very, very interesting.
Okay, and the last on the watch list is the deployment of the IFC Access Bank $500 million local currency accord. Now, the signal is fresh off the 226th Africa CEO Forum in Kigali, Rwanda. International observers are watching the immediate deployment strategy of this massive $500 million equivalent local currency facility. And now, this is the data to watch, okay? Track how quickly Access Bank begins disbursing these funds into mid-market, agribusiness, logistics, housing sectors, because the financing completely matches local operating revenues with local currency debt. It serves as a critical blueprint for de-risking African SMEs from destructive exchange rate volatility.
Yeah.
Now, we hope that you enjoyed every segment of the episode today.
Yes.
And please let us know what you think about each of the news, how it impacts you, and what we need to even look out for going forward.
Remember, the FX manual is there to, has been put up there to help each and every one of we Nigerians in terms of trading and everything, our businesses. The S&P global rating it's a sign that you can invest in Africa, invest in Nigeria. There's nothing to be afraid of. Investors, business owners, startups, anyone this is a green light that Nigeria is safe to put your money in and you get your results massively. That's for the S&P global ratings. For PENCOM and Dangote, yes. We can all go ahead with that. If you want to go ahead with that, you can go ahead with it. Also with the GTCO, they are sitting pretty, and I can say we are also sitting pretty here in the studio.
All right. Until the next episode, bye for now.